Tuesday, July 27th, 2010. Right now in the market, there's a couple positions set up for some pretty big moves. One of those positions is wheat, so let's take a look at wheat. In front of us, we have the long-term chart, price chart of wheat, and as you can see, over the last 3 years, it's been in a long-term downtrend. Rallies, any rallies, it's been very profitable to sell. So right now, we've just experienced a short-term rally in wheat. So hopefully, it'll be quite profitable to sell that one as well. Let's take a look at the COT data and see what it says. So as you can see, right now COT data is indicating, it's set up for a sell. Right now it's registered at a 0, which means it's the most negative it's been in a while. Proxy index again is below 30 at 25.8. So again, another sell signal being registered there. And if you look at the last two signals in wheat, it's been bang on here. That would have been pretty profitable to sell. Again over here. Let's see how profitable exactly. You're looking at a move about $13,000 there. Right around here, you're looking at a move about $8,500 there. So, so far these last couple signals have been pretty profitable. So, let's look at what the large traders have to say. So, I'm just going to remove that. So, for the large traders, as you can see, they've been buying since back in mid-June, and they continue their buying to this day, slightly turning down there. But what we want to see is we want to see this orange line break down below the moving average. But as of right now, large traders are, they're buying. Take a look at ADX. Now, ADX is a directional movement index, and generally, when it gets above 60, you're looking at the end of a trend. So it's currently reading at about 71.5. It's it's been up here for a while. It's not a timing indicator. What it does, it just tells generally that this trend is overdue and time for a reversal. So anytime now we should be looking. The trend's clearly been up the last little while, so should be starting to look for reversal in trend. So let's take a look at what. Okay, so right now what we're looking at is market structure. Everybody looks at this a little bit different. Some people call these head and shoulders. I use Larry Williams methods, and he calls it will swings, market structure. So right here, what we have is we have a swing point here, which some people call the left shoulder. Up here would be the head, and now we're currently in a downtrend. So in order to form the right shoulder, what we need to do is we either need to break above this day's high without exceeding this point and then break back down, or we need to break below this point. So right now we're still, market trend is still up because we haven't broken this point and we haven't formed the right shoulder or the right swing point. But just based on the current market action, it looks like we could be setting up for a change in direction. So again, everything's telling us that the markets are heading up, but we're set up for a down move. So let's take a look at our next indicator, which is valuation indicator. So let me just delete this here. So this is a valuation index. It's again not a timing index. It just kind of tells us what the state of the position is. And right now, on a valuation basis, it's reading at 92.4. So above 80, which again says right now wheat is overvalued. This isn't probably the greatest chart to show you how reliable it's been, but it's just something again telling us that wheat is set up for a down move. So let's look at some shorter term indicators. Let's look at L and L. Now L and L here, as you can see, we've got a point right here with price continuing to move higher. So price moves higher that way. Meanwhile, L and L fails to make a new high. So what that's doing is setting up for a double divergence sell. And what we want to see either happen is we want to either see this break up slightly, right? Oh, I'm going to show you what we can do. So if we go to the next bar indicator, right? So if price tomorrow were to break down to a new low, LNL will continue down, and nothing. But if it were to break up or just trade up slightly, LNL goes slightly up, and we set up for either a covered sell, or we set up for an LNL double divergence, where the one swing point is lower than the last one, but price continues to go higher. So right now, no signal yet, but we're setting up for one. Again, just seems to be waiting. Now let's take a look at one more chart, and that's just a basic plain chart. So right here, what we have, you can see, is we have an outside bar formed. So today's high was higher than yesterday's high. Today's low was lower than yesterday's low. Close was higher than yesterday's close. So what that does is it sets us up for a potential sell signal. If price tomorrow were to open above yesterday's low, we could sell at yesterday's low with our stop being up here. So, yesterday's low was 584, and we could sell there with our stop being at 604. That's going to be, what's that here? That's about $1,000. That would be our stop loss of $1,000 per contract. Downside would be quite attractive. Another one, we could use a qualified trend line. Basically, if it were to break down below, roughly the same point. So qualified trend line is going to give us the exact same sell point. The safest sell signal would be right here at the last swing point, which would be 572. I'm probably going to put a signal. In fact, I know I'm going to put a sell in tomorrow at either yesterday's low or today's low, depending on where the market opens up, and I'm going to use probably 592 or sorry 604 as my stop. So $1,000 contract. Anyways, that's what we're looking at with wheat. A little bit aggressive if you're entering in today or tomorrow, but either way, definitely continue to look at this market for a setup or for a sell signal. That's it for now.